So I'm dealing here with my auditors. And maybe they're not doing an audit, but they're doing a review. But we've got an audit firm here. So once again, as soon as I see auditors or audit firm or whatever, I need to put CPC. Because even if I'm not a CASA, guys, I have to adhere to the fundamental principles and independence because I'm doing a job that requires that. Okay, so you guys who are still studying, you have in your articles a responsibility to adhere to the CPC even though you don't have the CASA behind your name yet. And if you're found guilty of not complying, they can stop your articles and prevent you from ever becoming a CASA. That is why we are continuously saying, please guys, don't breach copyright now, because that is a law or regulation that you are required to adhere to now because you are using material that doesn't belong to you, for which you have a right of use, but only you have that right of use. Okay, so we're trying to already instill the principles that you as a CASA will have to adhere to in your journey to become a CASA. Okay, back to the CPC. So we are in public practice. What are the threats or the situations we are faced with that could threaten our fundamental principles? So the first thing, we could face a conflict of interest. We've already looked at this from a CA in business, so very similar situation here. So maybe now the auditors are going to provide the same service to two clients on the same matter. There's a conflict there. So as soon as you're doing that, you shouldn't be, and there's a reason why you're doing it, because you're probably getting paid or you are getting paid. So there's a self-interest threat as soon as we've got an interest in something. Two, objectivity and confidentiality, so same situation. So my first tier, my second tier, I've got to evaluate is the significance. Once again, there will be some principles to consider in section 310 to help us with that, but really we've got to look at, is this really going to affect my objectivity and confidentiality? And ultimately my safeguards are to disclose the conflict, and if I can't do that and the threats are not addressed, I need to end the conflict. There's no safeguard to reduce this to an acceptable level. And then on your sides, you'll see I've said new because they have amended the CPC where they have allowed for either getting separate members in order to address this conflict, or have a reviewer review the work. So two additional safeguards been included. Okay, professional appointments. So guys, this is important because this is also going to help us in our pre-engagement stage. Some of the CPC factors to consider with whether I should accept a client or not. And we could therefore have self-interest threats if we choose to accept when we probably shouldn't, if the client lacks integrity. So then we will have the threat to our integrity because we accept in a client who lacks integrity. Or to professional competence and due care if we don't have the knowledge to take on this client, but we do accept. So just a little pre-engagement refresher. We will do it at a later stage. However, we've got to consider ourselves and we've got to consider the client. And when we look at the client, we consider their integrity. And we look at ourselves, we've got to consider the ethical requirements, which is this, the CPC, and whether we have sufficient competent staff. And so ultimately here we're saying if we accept and we don't have sufficient competent staff, then we've got a threat to professional competence and due care. So I'm going to put that here as 2. And if we accept and the client lacks integrity, then we are going to have a self-interest threat to integrity and professional behavior, because this is going to discredit the profession if we are being associated with a client who lacks integrity. Okay, so We've got our threat to the fundamental principles. We've got to evaluate the significance. Is their lack of integrity going to impact on ours? Is it impossible for us to have the staff with the necessary competence to take on this engagement? So I've got to first look at my significance, and then here are some safeguards. So if we can assign sufficient staff, we can address that professional competence and due care threat, provided we can also get realistic timeframes and experts. If the clients are showing that they are going to take steps to address the integrity issues, then we can accept, because there is some proof that they are working on that. So let's go to 320, because this is going to come up often. Section 320, professional appointments. So this is in the acceptance of a new client, or if there's any changes in an existing relationship or engagement, we could have threats to the fundamental principles. So in general, there could be threats to integrity or professional behavior if there are questionable issues associated with the client. What threat? It would be a self-interest threat if we are accepting a client and we are aware that they have been involved in illegal activities, dishonesty, questionable financial reporting practices. So the previous auditors have probably resigned as a result of being aware of this. Now we want to accept the client and we become aware of this. Accepting them would create a self-interest threat to integrity or professional behavior. What are the factors in evaluating this? We got to consider knowledge and understanding of the client and those charged with governance, and then potentially the client's commitment to address these. Okay, another scenario is a self-interest threat to professional competence and due care if the engagement team does not have the necessary competencies to perform the service. Factors in evaluating this level is our understanding of the nature of the client's business, the complexity of the operations, the purpose, the nature and the scope of the work to be performed. Our knowledge of the industries, because maybe we don't have knowledge of this client, but we've got a very good understanding of the requirements of this industry, so that knowledge could actually help us here. And the levels of fees. So what are the safeguards in this situation? Assigning sufficient engagement personnel with the necessary competencies, agreeing on realistic time frames, using experts. Okay, so changes in professional appointments. So this is now, once again, we've been asked to take on a new engagement that had previous auditors. Factors we need to consider is, why are we replacing? Were we asked to replace? Was there a tender? Or is this complementary work? Okay, this could create self-interest threats to professional competence and due care if we accept an engagement before knowing all the relevant facts. So, because there's a change, we should be asking the previous auditors, why is there a change? Okay, if we are asked to undertake work that is complementary to additional work of an existing or previous auditor, so maybe second opinions, self-interest threat to professional competence and due care, if the information that we have is actually incomplete. We don't have all the information. So once again, second opinions, this comes up later. You've got to evaluate the level of the threat. And how can you do that? You need to contact the existing or the previous auditor or accountant so that you understand that you've got the right information, complete information. The safeguards to address that, obviously, asking the existing or predecessor accountant to give you any information that they are aware we need to know. Okay, obtaining information from other sources. communicating to the existing or predecessor accountant. So once again, during a change, we need the client's permission to do so, guys. Otherwise, we're breaching confidentiality. Okay. If they don't give us, we shouldn't accept the engagements. However, there could be exceptional circumstances, so we've got to consider this. When we communicate with the previous, we are bound by confidentiality. Okay, and then clients and engagements continuance. So we were the auditors last year. We need to review if we want to continue this. Why? Because there could be a self-interest threat to integrity. If we are aware that they have got improper accounting and we continue to associate with this client. So even with a continuation of the audit, we need to consider if there's any threats to our fundamental principles. Second opinions are easy to identify, guys. They say to us, please give us an opinion. We've already got one. What is yours? So they are asking us to do so. We could face a self-interest threat to professional competence and due care if they ask us to give an opinion, but they don't give us all the information that the previous people had. So ultimately, they're trying to influence our opinion to be an opinion they were looking for, not the opinion they got. Okay, so big threats. We've got to look at the significance of that. And again, do we have all the info? And safeguards to get all the information, to contact the previous guys, to find out, is this the information you had? Was there anything additional? And then on your slides, you'll see I've got a bold new. There has been a change to second opinions. Decline the second opinion if permission is not granted. Also, you cannot provide second opinions regarding an opinion on the annual financial statements. Fees and other type of remuneration. So, if we are reducing our fee to take on an engagement, we could face a self-interest threat to professional competence and due care because the fee is based on the work performed. If we are reducing our fee, we're going to do less work, which means we could be compromising the audit here because we are not going to do enough work and therefore threatening our professional competence and due care. So safeguards are to adjust the level of the fee or get a reviewer, provide the client with the basis of the fee so that they can see, I can't give you a fee, I can tell you how I can go about with that fee. Or we could face a self-interest threat to objectivity if we have a contingent fee. So, provided we get this result, we will get this percentage of the income. So your fee is contingent on an outcome. It could affect your objectivity. Sorry guys, this should say objectivity. And so a safeguard is to have a reviewer review the work. So guys, look at fees here. We're saying if we are charging too low or if we have contingent fees, these are the threats to the fundamental principles. When we look at fees later for independence, it's going to be if the fee for this client is a significant fee in terms of the audit income fees. Okay, so different situations require you to apply different sections in the CPC for fees. Let's quickly go and have a look at 330. Section 330, your fees and other types of remuneration. So what could happen? There could be self-interest threats to compliance with the fundamental principles based on the level and the nature of the fee. The level of the fee. So the fee quoted could impact on compliance with those fundamental principles. Just note, quoting a lower fee than another professional accountant is not in itself unethical. However, There could be a self-interest threat to professional competence and due care if your fee is so low that you might find it difficult to perform the engagement in accordance with the applicable technical and professional standards. These are the requirements, these are the standards you have to adhere to in order to perform the audit. These standards require you to do this amount of work. I don't have that amount of time because my fee is so low and my fee is based on time. So I'm going to have to cut some corners here. In cutting those corners, I cannot comply with those professional standards. So my fee is not representative of the work I need to do. You need to evaluate the level of that fee. So your significance, things to consider is whether the client is aware of the terms of the engagement and the basis of the fee, because this is explaining why I have to charge this amount because I've got to do this work. Okay, and also, was the fee set by an independent third party? Safeguards, so this is how we can protect this threat from actually affecting our professional competence and due care. You adjust the fee or the scope of the work so that I'm making sure that I'm still adhering to the technical and professional standards, but I potentially am not going to do all of these additional requirements of the job. Or I will do all the requirements, this is the new fee. Or have an appropriate reviewer review the work performed to make sure it is at the correct level, compliance with the technical and professional standards. Contingent fees, you cannot charge contingent fees for the preparation of an original or amended tax return. So if you see that they want to do contingent fees for a tax return, based on how much refund we get, we will give you a percentage of the fee. It's not allowed. This is too big a self-interest threat to objectivity. Okay, it cannot be eliminated. Note here, guys, the fundamental principle is objectivity. When you go into 4A and they deal with fees and contingent fees, they will be addressing the threat to independence. Okay, here we are still in part 3 where we are dealing with the fundamental principles alone. Okay, so you can do contingent fees for non-assurance. However, be aware this could create self-interest threats to objectivity. You've got to evaluate the level, the significance of the threat, factors to consider, the nature of the engagement, the range of possible fees, the basis for the fee, whether an independent third party were to review the outcome, whether the fees set by an independent third party. The safeguards to address that self-interest threat: have an appropriate reviewer who is not involved in the work review the work performed, or get a written agreement with the basis of remuneration upfront. Referral or commissions, we can do them, however they do create or could create self-interest threats to objectivity and professional competence and due care. This happens if we pay or we receive a referral fee or commission. Okay, so here's some examples. You pay a fee to another professional accountant for the purposes of obtaining a new client work. Or you receive a fee for referring a continuing client to another professional accountant or expert. Or commission is received from a third party because of selling something to the client from the third party. Safeguards for these: get an advanced agreement upfront and in writing, and disclosing to the client upfront and in writing any referral or commissions. Gifts and hospitality we've done from a CA in business, it's all the same here. Self-interest, familiarity, or intimidation threats to your integrity, professional behavior, or objectivity, because you are potentially being influenced. What are your safeguards? Either to inform management or to decline the offer. Why? Because ultimately, in terms of significance, it would obviously not be clearly trivial. Okay, so the value of this is going to help us to determine whether we should or shouldn't be accepting that. Custody of the client's assets, again, guys, this will be easy to identify because they will say the client has asked you to take custody of their assets. Doesn't happen often, so not something I want to spend too much time with, but if we do take their assets, then we face a self-interest threat that we've got the assets and we may start to gain from them. Okay, so professional behavior as a result of it, objectivity. Also, guys, if the client's getting these from illegal operations, integrity for us. Okay, and all we need to do then, obviously, as a safeguard in order to hold this for them, make inquiries about the source, make sure we keep them separate from our assets so that at the end we can give them all of their asset back and have not gained from holding it for them. Okay, NB here. Section 360, responding to non-compliance with laws and regulations. We as the auditors become aware the client is not complying with laws and regulations. We have to do something about it. And if we don't, we have got a self-interest threat if we chose not to, or if we're intimidated by them not to, an intimidation threat to our integrity or professional behavior, because we have to be honest and true, and if we are aware they're not, we've got a responsibility to act. So what are our safeguards here? We've got to understand the matter, we've got to discuss it with management and ask them to take action, and then after looking at the actions, if it hasn't been significant to actually eliminate this non-compliance, we need to disclose it with the appropriate authority and withdraw from the engagement if it's that significant. Okay, I want to take us to 360 because this should come up. Because ultimately, when we are doing scenario questions, generally the clients are not complying somewhere, and so this section needs to be addressed. It's a massive section, guys. So I've specifically highlighted the things that are going to give us marks when answering, because a lot of this is also just helping you to understand the process. Okay, so first of all, self-interest or intimidation threats to integrity or professional behavior if we become aware of the non-compliance. So our objectives in this situation is to comply with the principles of integrity and professional behavior. So we would need to alert management to get them to rectify, and if they don't, to take further action. Okay, so guys, you're going to see these objectives being met as we work through how we should address the matter. So first and foremost, we need to understand the matter. Okay, and so that means we need to understand how they managed to not comply with the law or regulation, so the nature and the circumstances. Then we need to discuss it with management and with those charged with governance. Once we have done that, we need to make sure that they have addressed the matter. So we need to tell them to rectify the situation, to disclose the matter to the appropriate authority if they need to, and so on. Then, if they are a subsidiary of a group, we need to inform the group partner of this information too. Now we need to determine if further action is needed based on how management and those charged responded to our information. So did they respond timelessly? Have they adequately investigated? Has action been taken? If not, then we need to determine what action should be taken in the public interest. And so, disclosing it to the appropriate authority and withdrawing from the engagement. Okay, it's huge in terms of information, but as long as you just focus on the highlights I've done, you should be able to answer your question with just working through your highlights. And then, guys, I've added the new section, section 325. You can find this in the changes at the end of your standard. This is examinable for RTC 2023, so you guys can be tested on it this year. It is also and links nicely with your ISQM 1 and 2, where an engagement quality reviewer is required if it's a listed entity, if law requires it, or if it's an appropriate response to a risk. Okay, so this could be tested because of the new standard. Alright, so what is the risks or the threats here is that the engagement quality reviewer is not objective. There could be a self-interest threat or a self-review threat to objectivity. Okay, how could that happen? Well, the engagement quality reviewer is a friend of the partner. Self-interest threat, familiarity threat to objectivity. If the engagement quality reviewer was the previous partner on the audit, then he's going to have a self-review threat because he could be reviewing work that he was involved in. The opening balances would have been work he would have been the partner for. Okay, so there are these threats to objectivity. There are additional, guys. There could be threats because of who the engagement quality partner has to report into. So you get intimidation threats. You get familiarity, like I described in the beginning, with a close relationship. Okay, so there are multiple types of threats that this partner could have to objectivity. The safeguards. So they've given us 2 safeguards in the code. They've said to reassess reporting responsibilities. So that's obviously if there's intimidation threats with how they are reporting. Or they could implement a cooling off period of 2 years. So if you were the previous partner, you cannot be the reviewer until 2 years have elapsed. Then you can become the reviewer on the engagement. Okay, let's quickly have a look at the section. So section 325, guys, if you can't find it, you'll find it in the changes at the back of the code. Okay, if you have an old code, then you won't have it. Okay, because this is the new changes from 2021. Okay, so all they're saying is we're dealing with the engagement quality reviewer and the threats to their objectivity. What are the threats they could have? Self-interest threats. If there's 2 partners, one is the partner on the audit, one is the engagement quality reviewer, and then those 2 partners have the equal opposite relationship for another client. The reviewer on this audit is now the partner on another audit, and he has taken the partner for this audit as his reviewer. So it could be self-interest. Self-review, previous partner, and now you're the reviewer. Familiarity, the relationship that you have with the audit team. And then intimidation, if you are reporting to the partner responsible for the engagement. So what are the levels of the threats? You've got to look at the roles and the seniority of each of the individuals, the partner, and then the reviewer, the relationship, the length of time that they were involved in this engagement. And then how do they address the threats? Well, for that intimidation threat, reassign reporting responsibilities, and for the self-review, have the cooling off period. Obviously, for the familiarity or self-interest, you may not be able to reduce those threats to objectivity, so you have to find a new reviewer. Okay, and then just see this here, guys. It says that the cooling off period is 2 years. However, it does not address the threat in ISA in section 540, where we're looking at the threats to independence. So the cooling off period in 540 to address the threats to independence is a different requirement because you're looking at independence versus objectivity. Okay, let's move on to Independence, Part 4.